Hello and welcome to Crux Investor. We caught up earlier today with Philippe Cloutier, CEO of Cartier Resources, TSXV listed gold explorer hunting for gold in the Abitibi region. If you want our thoughts and opinions on the conversation, their business plan, or indeed the company itself, you can find that at cruxinvestor.com/club, where you can also find company reports. You can find commentary from experts from around the world on a variety of companies and commodities. There are training videos on there to help you with your diligence. We've also got summaries of other interviews that we've done just to save you a bit of time. And of course, there's a thriving community of investors sharing their thoughts and ideas with each other in a nice, friendly and safe environment. So do go and join them at cruxinvestor.com/club. And we'd love your feedback too. So do give us a like, leave your comments below. And you want to see what we talked about today, take a look in the description. Philippe, how are you doing, sir?
Fine. Happy New Year.
Happy New Year to you. You're our first interview of the year. Congratulations.
January 4.
January 4. We're starting.
3 feet of snow backyard here.
Really? Oh, fantastic.
Yeah. Which is
cold
good for
here,
sure.
but no snow. How's Christmas for you? New Year's? All good? Quiet?
Restful.
Yeah.
We got a little sharp uptick in our stock price, which was fun. So it's great to be back to work on the back end of that, but did get some good a 2-week rest.
Yeah, I think that's important. You know, people, you do need to rest. You know, take it easy sometimes. But anyway, we're gonna talk to you about what your plans are for this year, and I suspect a little bit about what you did last year as well. But before we do, why don't you give us that 1-minute overview of the business, and then we'll pick it up from there.
All right. We're a Canadian-based exploration company focused on gold in the Abitibi Greenstone Belt, the Quebec portion. Our business model was to pick up gold deposits in the last bear market at $1 an ounce. And when the market picked up a few years ago, we were very fortunate that we were rewarded by senior sponsorship. Agnico Eagle took a 19.9% stake in us. Since then, other senior investment funds, institutional funds, also took a quite sizable position. And that sponsored our adventure to advance our deposits. And we're about to finalize the price tag event on the Chimo mine project, and we are initiating drilling on our second deposit, the Benoit gold deposit, that is in the heart of, or northern part of the Windfall Gold Belt. That's
fantastic, absolutely fantastic. So we're going to talk about Benoit in a second, because I noticed that you've put out a 43-101 on that, and that's great. And we'll talk about that in a minute. But first of all, just for people, again, who are coming at this new, because we're seeing a lot of generalists coming into the marketplace. A lot of people don't really understand mining, natural resource investing per se. I want to talk about the model that you guys employ, because you've been on a couple of times before. We're impressed with the story on each occasion. And we've talked about the business plan and strategy for delivering that first time around. And we talked last time around about Chimo. And I want to talk about that again now, if you don't mind. Just it kind of paints a picture of how you approach projects. So let's talk about that model of Chimo, and then perhaps how you replicate that with Benoit. So if you don't mind, just go over that again for us.
What Chimo, the culmination of the program was, we completed the third phase of diamond drilling, and we delivered a second resource estimate, and we launched the process to initiate and deliver a third resource estimate. Over 60,000 meters of diamond drilling within 500 meters of a shaft and underground infrastructure. We're looking at delivering anywhere between 1.7 to 2 million ounces of gold in this next resource estimate, which is excellent because the project's by the highway. And that will dovetail into a PEA and determine the value, put a price tag on the project. So that's one of the deliverables in the next 2 quarters for our shareholders. And while we're doing that, we're drilling on Benoit.
Well, let's talk about price tag, that phrase that you use, because there's a former producing mine. You have drilled 60,000 additional meters, and you've got to that point where you think that you've done as much as you can. And now it's the turn of the engineers. So they're in town and moving it to the next stage, right? So just talk us through what's happening. You mentioned the next couple of quarters is important. Why?
Well, on the one hand, while we're doing basic exploration work at Benoit, at Chimo, we're entertaining the various Q&As with the resource consultants and the engineers. And because the project is a past producing gold mine, we've done the drilling, but we've come to realize that there is tremendous value in the historical, geological, metallurgical, and mining infrastructure heritage of the project. And so, unlike a newbie on the block or a new project, this one requires that we pay attention to the given parameters of the mineralization, the infrastructure, the optionality that the project has. And we're better off being walked through the process by the experts, on the one hand, the engineers, and on the other hand, the resource estimate people. And the beauty of it is we're in the final, in the final process, the final steps of delivering that value. The first, obviously, will be the resource estimate itself. Maybe it will be published by the time this interview airs, and we are meeting with those people in the next week or so. And then that resource estimate will be handed over to the engineering group, and they will start to put, prices and costs to the project. And that will be delivered to the market. And what the market will do with that is it's up to them.
Well,
we know it's there.
Well, yeah, that's always the mystery in all this. That's the fun bit. Okay, so third resource. You seem quietly confident there, looking at your face, about what you're going to be able to talk to the market about. This video will be out before then, so unfortunately we perhaps won't see those, and maybe you can come back on and tell us about the numbers, perhaps. But
I'll be quite proud to do that. Yeah. Okay,
that's good. But if I look at the beginning, the low points of last year, March, April, 8 cents, up around 34 cents today. That's a good year, good performance, but you're going to have to keep that up. So what I'm keen to understand from you today is, okay, you've said, okay, the market will react to the resource, how it reacts to the resource, but what are the bits that you're in control of in terms of moving Chimo through into something which is going to be attractive to one of your, people like your shareholders, Agnico Eagle? What's the picture you're going to have to paint for them to go, do you know what? This is interesting.
Well, for them, for their competitors, and for the market, or even the sophisticated institutional investors, we want to paint for them the full optionality portrait, all of the alternatives going forward. Chimo can be bulk mined underground, low grade, high tonnage. It could also be cherry picked, more selective mining. It could also be bulk mined and then sorted at surface through ore sorting plants, where you could high grade the deposit, the material, while lowering the tonnage, and then having optionality to the different mills along the highway. So that in itself is we stand to benefit if we pace ourselves through that final month or so, and there's tremendous value in that, and that value will be published, and then hopefully our share price can be re-rated with respect to that. All right, while that's happening, obviously you've seen the backdrop of the soaring metal prices and the increased M&A. We've recently today we saw Yamana and Monarch, the M&A actually fall through, which was good. And so there's one less junior along the highway, which naturally should increase the value of Cartier's ounces.
Yeah. Okay. But coming back to this price tag component is, again, talk to me about. I'm staying away from the mining stuff. We've talked about your strategy in the first one, your business plan strategy in the first interview. Last time around, we spent a lot of time on Chimo and just understanding exactly what you've got there. So I don't necessarily want to go over old ground there, but just coming back to this thing about, so Agnico Eagle and people like them, their peers, you've got to show scale, optionality around the way that they can go about mining this underground open pit. You've got your high grade component, you've got your bulk component. It's about the volume of metals contained, isn't it?
Absolutely. And it's about various business. Each mining company has their checklist, has their recipe. Some stay away from certain types of ores or certain types of mining methods. So we need to show this project has alternatives. And the value in Chimo is the fact that you're not going to have any surprises, because historically, you know how the rock mechanics works. Historically, you know how the metallurgy of this thing. Historically, you know what you can haul from the shaft, and we press release that shaft haulage capacity. It's an engineering document. So we simply need to show the markets and the corporates, you know, the full range of value items for this project, and it's well underway. And so what I can control is what we've done technically so far. What we can control is our discussions with the resource estimate people and engineers. And then we publish that. We're confident that should turn heads. And then the market does, and the corporates do, or the institutions do what they want with it. That's how, as far as we can go.
But it's going to need to do something fairly big and significant for you, this resource, because the market's valuing it at 70 million market cap today. That's for all of your projects, not just Chimo, right? So
that's right.
And we're about to talk about Benoit in a second and what you've got there. So, you know, would it be safe to say, I know they all say it, but are you going to say to this thing, the market is undervaluing it? Are they undervaluing you because you haven't communicated what it is that you've got, or are you just at that stage pre them being able to get excited? I mean, what is it?
Yeah, well, listen, obviously we communicate how we communicate, but the preliminary economic assessment or third resource estimate, which when they know we're not going to do a fourth one, is basically where they're going to say, okay, this is what you have. And a lot of people are going to do their own back of the envelope calculations. Up until now, I'll have to admit that there's been some wiggle room for them. But come this next resource estimate, or eventually the PEA, then the numbers are out there.
Right.
And that's where I think the market should, if we have a normal market, a responsible market, it should adjust. And then Benoit kicks in.
Right. Okay. So how much of your current valuation do you think the market is putting on Chimo or any of the rest as a percentage?
Right now, I would have to think they're putting over 80% or 75% on Chimo, and Chimo is not yet officially got a price tag on it, and it will in the next few months. Okay. So 70% of our market value right now is tagged to Chimo.
Right.
And then the blue sky is the Benoit, the Wilson, and the Fenton deposits.
Right. Okay. Let's see what happens there. Let's move on to Benoit, where between Benoit, Wilson, Fenton, and a few other bits and pieces, I think you've got Dollier, McCormack, and the Cadillac fault extension in there too. They're getting somewhere between 15, 20 million valuation, according to you. I'm interested in this cookie cutter approach, because you've done as much as you're going to do on Chimo that you can control anyway. What are you doing at Benoit? This 43101 has come out. So what's the next steps? How much time, money, and effort do you spend getting that to position as per Chimo?
Well, okay. The benefit that we've taken away from Chimo is that our approach works. You stick to known mineralization and you drill at depth or along strike, your solid vectors. Benoit responds extremely well to that. We've seen that in 2014 when we went fishing right beneath the deposit, right down to 750 meters, and discovered that the system continues. What we wanted to do at Benoit was to anchor in people's mind what that deposit is really about. And again, it's right in line with Cartier's strategy. It is a wide, high volume mineralized system that can be traced down to at least a kilometer. And so we've never cherry picked the really high grade results. And so again, when we went about doing the resource estimate, we started with the historical work, and then we added our work to it. And as a reminder, the Benoit deposit itself in 1993, it was a historic estimate, mind you, not 43101 standards, because 43101 came into effect in 2001. There was about 500,000 tons of 5.5 grams, or just about 90,000 ounces of gold. And gold was trading at $500 Canadian then. Well, in this resource estimate that we published in December of this year, there's 220,000 ounces of gold, 500,000 ounces of silver, and 7.7 million pounds of copper. So you've gone from an in situ value of, $45 million of metal to an in situ value of over 468 million at this morning's price of gold, silver, and copper. We did the resource estimate using a price of $1,600 US gold, $18 US silver, and $2.6 per pound copper. So again, compared to this morning's prices, which are on the uptrend, we've given ourselves some wiggle room. So the program it's a three-part program. We'll be drilling the depth extension of the deposit, much like we did at Chimo. And we already know that it extends down to 800 meters. So we'll be repeating some of that drilling. In the last program in 2014, one of our holes went wild and ended up punching in the original deposit, only to confirm the grades of the deposit. So we're going to be doing a lot of the drilling with directional drilling at depth. We're going to go down to 1,300, 1,400 meters vertical. We're going to be drilling 5 ore vision anomalies that are proximal to the deposit that are copycat geophysical signatures of the Benoit deposit, 3 of which are within the direct extension, lateral extension of the deposit. And then the third component of the program will be to be drilling the crown pillar of the current deposit in the first 100 meters. And there we're going to be doing geotechnical work to see how much more of the crown pillar that we can add, and potentially add up to 100,000 ounces of gold. We're going to be doing metallurgical work, right? And then we're also going to be confirming those ounces to be added to the ultimate resource estimate. All in all, those 3 components will total 50 diamond drill holes, 25,000 meters. We've started this morning and with 2 machines, and we are set to run through mid-October or early November 2021. So it's a sizable program, it's basically going to be almost all of the flow-through rays we picked up in September to 2020, and so people will have to look forward to that, immense amount of news flow from the drill bit on Benoit and growth of resource that stems from that drilling, while they see news flow from the Chimo resource estimate and price tag event, which is PEA. Okay. So a lot of exciting news,
Yeah, absolutely. So you raised 9.3 million back in September ish. You had about $4 million then. You're going to be going through that. So I suspect. So tell me this. G&A wise, are you going to be good for next year?
Oh yeah. I mean, once the program is over, the full diamond drilling program on Benoit is over, and the resource estimate on Chimo as well as the PEA, we're still sitting with $4.5 million in the bank. So a strong treasury, nice war chest, walking into what 2021 markets can provide us in terms of interest from various parties.
You're building building these blocks and putting them together. So Chimo is quite nice. You've explained what we can expect to see, and as you say, the market will react, how the market reacts. And is that a case of you would want to do the PEA yourself, or would that be the time to bring in partners and look at doing a PEA with them? Because it's not an expensive, it doesn't take long to do.
No, well, especially not for especially not for a project like Chimo, because your parameters and variables are pretty well pigeonholed because it's a past producer. On new projects such as Benoit, you could expand on that. So no, the PEA on the one hand is a price tag event, and on the other hand, it's a blueprint to build it. I'm not saying we're going to build it because that's it's not part of our DNA, but at least you've got a blueprint or the initial blueprints to help build this thing. Should a group come along and want to build it,
Well, that's the point of getting to Philly.
Not being a producer.
Because you told me last time you're not going to build it, right? You said we're not builders. We've got a 4-man team, low G&A, haven't got that DNA. Who are we kidding? But what I'm trying to work out is at the point at which you bring in interested parties. I mean, PEA is fairly early stage typically because you don't know. Well, the clue's in the name. It's a preliminary economic assessment. You haven't really done the hard yards yet. So do you think about bringing people in at that point, or do you say, well, actually, the PFS is the point to do that? I mean, where do you take it through to, given that you're not going to start building this thing out yourselves?
The PA will be the final event for us. I mean, that
gotcha.
We're not going to take it.
Perfect.
And try to compare that to a real estate market. I mean, an assessment of value of a building in a well-established real estate area has more value than a real estate valuation on a building in an area that is,
Got it. So there's the cookie cutter right there. Benoit, you're going through this process, 25,000 meters of drilling in 2021. You got the money to do it. The flow through money is already there. You're still your cash position at G&A and your G&A, you've got the money. You've got low G&A. It's all good. How much more time do you need to spend on Benoit to bring it through to a position where it can look at doing a resource for itself? It can deliver a PEA, given that's your model.
Well, by the end of the year on Benoit, we'll be well lined up to look at a new resource estimate.
Got
it. It will not be as robust because of the drill spacing that we're that's the nature of the program that we're doing on Benoit as on Chimo, because on Chimo was much more tightly spaced.
Yeah.
But at least it will definitely be an indication, well, this thing's moving forward or not.
Got
so for Benoit, it is a pivotal year for the project.
Right.
Much like last year was a pivotal year for Chimo.
Absolutely.
But
what was your takeaway from the 43-101? Maiden resource. It's always good to kind of get that thing over and done with, but you want to build on that one. But it gave you enough clues to go, we should continue and we should definitely spend this money.
Yeah. Oh, absolutely. It was a dive into what the system can offer, because you've got copper credits, you've got silver credits. And the way we've engineered this whole diamond drill program to explore a system or a project that could, what we're really looking at is can we tag 2 million ounces on Benoit? And then that would also be a game changer. If we could scope out, not measure, but scope out, okay, this system can look north of 2 million. Then we're off to the races, because Chimo can afford to have less than that amount of ounces because it's by the highway, it's near a mining town. Benoit requires, because of its remoteness, a bit more ounces, right? A bit more oomph. And all of a sudden, within a year, because mind you, our first resource estimate on Chimo was December 2019. Almost within a year, we'll have gone from 0 ounces to north of 4 million ounces, which is.
I'm glad you said that. It's just a degree of honesty, which I appreciate. Because people forget to kind of factor in things like proximity to highway and all the infrastructure, because that costs when you're a little bit more remote. Dilution.
Absolutely. Benoit needs to be different. Benoit needs to be bigger, needs to be richer, because it's not like Chimo. Chimo is got the benefit of having already been a mine, right? And what the work we've done, we feel that it will be a mine once again. Benoit is entirely different. So now we're moving into the more blue sky-ish, grassroots, type thing.
Okay, so geologically, you're seeing the same sorts of formations, and you feel it's got some of Chimo's geology, right?
It's got the characteristics that we look at. Right. Systems that can produce large volumes of rock that are mineralized at relatively constant grades and that can generate ounces.
Right.
You could generate ounces per vertical meter. That is paramount in our business. No point in chasing, showings, dead end showings. It's that there's no point in doing that. It's a lack of respect toward your investors when you do that.
Right. So that's the way you feel now with the 43101. During the course of your drilling next year, it's 25,000 meters. What would kind of failure look like? What would the drill results need to look like for you to go, do you know what? I'm slightly worried about this. I'm just going to get a sense of, like, if we see you announcing certain types of drill results next year, you called it now and gone, do you know what? That's not going to be good enough. Given it needs to be slightly bigger than what we've seen at Chimo.
If you take at Chimo, we were quite lucky, and we were sticking to zones, and we were a high level of success. At Benoit, if we had 50% success hitting the zones, I would think that would be failure, because I would be scrambling to generate volume and openness to the system.
Right.
And then it would go from being a deposit type project to a full-fledged grassroots exploration program, which it's not that right now. Okay. So we will be monitoring that, and very fortunately for the Benoit project, and I say this for many reasons, very fortunately, the Benoit mineralization is extremely visual. If you go on a website, it is a sulfide stringer system with highly chloritic selvage and wall rock. So while you're drilling, it's not one of those projects where you say, I have to wait for the assay results in order to do the next hole. No, it's a project that has the benefit of doing real-time decision-making on site. Whereas a project like Chimo, if it had not been a past-producing mine, you get a quartz vein with specks of pyrite and arsenopyrite. You say, well, this might run, this might not. Mm. Benoit is a system that is quite different from the Chimo system. And at least, we suspect that the labs in the Abitibi are going to be bogged down seriously because of the horrendous amount of drilling that's being done by our competitors. And so we need to be on the lookout and be able to do real-time decision-making in the field. Benoit offers that.
Okay. Again, I guess you'll come back on, keep us up to date, let us know how things are going there, because it looks like more of the same, which would be great. I think it'd be great. But as long as people
March
are building
of this year.
March of this year, okay.
Oh yeah, about March of this year. In the next 3 months, I'm hoping to be back here either crying or really, really happy to say, hey Matt, how you doing?
We don't want any more crying men on this show. Seriously.
No, but I mean I for one, and I know a lot of my colleagues and competitors don't believe in throwing money out the window. In our business, it's really hard come by to raise money in the markets. And when you have projects that are the type of projects that we have the benefit of being able to turn the drills off when we feel it's not going our way, and avoiding that spend of money.
Okay.
Again, we have other projects that we could direct that money to if we see the project is not delivering. If we had only one project, then
Well, I've got some good news for you. I'm seeing headlines that gold's going to 10,000, so I think you'll be fine.
That's something I can't control.
So that's the same reaction I had, but maybe not in 2021. Despite no matter how enthusiastic you are, but yeah, I think it'll be a good year for gold. Again, I do hope. Okay, so right, we talked about two of your projects. We've also previously talked about Fenton and maybe Wilson. Is Fenton? Are you spending any money on Fenton this year?
Well, Fenton is a joint venture between ourselves and SOQUEM, which is a government-owned exploration company.
Yep.
About a year ago, they were mandated to politically to move out of the Abitibi because they felt that they no longer needed to support the Abitibi. And so now they're investing or co-investing in other parts of our province. And so there's an opening or an opportunity for us to take back at the other 50% of the Fenton deposit.
Okay.
So that would be a priority for us. And we'll see how that negotiation or that progresses. And then next in line is Fenton. But as you may suspect, we've been approached by other junior companies that are new to the area, and they've, and as other people set up here in Quebec, these juniors from elsewhere knock on our doors to see if they could joint venture our project. So perhaps Wilson will be, although it's next in line after Fenton, will probably get work done before Fenton, but with the other people's money. So
okay, either of those options not priority for you per se. You'll look at it when opportunity comes along. Is that what you're saying?
Indeed. I mean, you've alluded to our systematic approach. We like to do things one thing at a time, do it well, and then move on to the next. We don't believe in firing off in all directions.
Okay. I couldn't help but notice, and I'm really glad you've done that. You signed a mineral exploration agreement with the Cree First Nation of, I better get this right, Waswanipi. Did I get close?
Waswanipi, yeah.
I got that right.
There are 9 Cree First Nations in northern Quebec, and Waswanipi is the southernmost one, which happens to be the Cree First Nation where the Windfall project is in Benoit. And as a group, they're extremely proactive. They're really business oriented. They also have the drilling company that we're using right now is also the drilling company has a joint venture with the Waswanipi First Nation. They actually train diamond drillers.
Yeah.
And it's a very small community, but it is a very modern and proactive community when it comes to being part and training their people for the mining and forestry industry and various services.
So I want to talk about this, and I want to talk about it with you because it kind of we took, like you took a break over Christmas, but we still we got thousands of communication over that period, and I spent the first 2 hours of my day responding as best I can to those people. So, but we're seeing a lot of generalists coming into the mining investment space because the shine has slightly come off of the technology investments. I know we've got things like obviously Bitcoin's having a good run of it at the moment, but people are looking at precious metals. They're looking at battery metals. These thematics are quite powerful, but they don't know much about them. They haven't invested in this space before. And we've seen a few if I'm honest, quite crass comments like, why are you talking about First Nations? What does that even mean? What is that kind of leftist BS that you're talking about? We've done so much for these people. I know it's not, but I want to tell you what's being said, right? It's kind of shocking if in a way that people are walking in, but you've got to remember that some people are walking into this going, they have strong views about and beliefs about certain things, but they are investors nevertheless. So you tell me, remind us the importance of working with First Nation, Aboriginal, whatever you want to call those groups. Why is it important?
No, it's fundamental. I mean, if your project makes it to a mine, one of your key components of operating that mine is human resources. And one of the highest costs on an operation is fly in, fly out. And you have a community or local communities, not only the First Nations, but the very small towns that are already established there. And they don't like to see people flying in from Montreal or Toronto you've got human resources in place. So you're way better off training them right then and there to service your future mines and or forestry installations. So it's not leftist BS at all. For two, they're there in the territory, and they want to manage, or they want to co-manage the natural resources where they live. It's absolutely fundamental. It's absolutely fundamental, and it's we're very lucky here in Quebec because the Crees many years ago in the 1970s signed a landmark agreement, which is the James Bay agreement for the hydroelectric dam development, and that was the foundation for them to start to develop businesses of their own and to participate in the development of natural resources. So unlike other areas in the world, there is legal precedence and there's business precedence for harmonious development of mine development or exploration work. It's maybe people see this as an obstacle when it's in other jurisdictions where there are conflicts, but in our case, there is no conflict. It's just setting in motion a process where everybody's part of developing this to fruition.
Yeah,
it's fundamental. I mean, I've heard about those comments, but I don't for the life of me. And now we're not the first. I mean, the Osisko people have done this. The Bonterra people have signed. The Gold Corps, Agnicos,
it's normal. It's normal. So the reason I brought it up, and because you're the first interview of the year, but secondly, because when I see comments like that, it reminds me how naive, how inexperienced, how closed, and I say in some cases quite crass in the way they describe that. And you've described some very obvious and I think practical reasons, but I think it's also worth understanding that with the First Nations or in Australia's Aboriginals, there's also a case of if you don't get them on board, they can block your permitting. Well, they can be a real big hurdle. So you need them on board.
Well, here's another dimension of it. And I discovered this 15 years ago. When you're an explorer, a junior explorer, and your objective is not to develop, but to provide the senior gold companies with a project that they want to take on, right? If you, as a junior exploration company, have not developed good relationships with the local communities or the First Nations or the environmental department of the ministries, that senior company is going to see that right away and is going to say, well, yeah, I like your deposit, but I'm going to buy it at a discount because I have to clean up your mess, whether it's an environmental mess, whether it's a social mess, whether it's a community. It's like, so you're better off doing the right things from the very beginning. It adds value ultimately to your deposit.
Totally. Well, it's a point worth making because
Absolutely.
Investors looking at projects which do not have these agreements in place may struggle. And there's too many examples of big companies who've overlooked this point, stepped in and have not been able to clean up the mess, have not been able to get it over the line, and have been held to ransom, right?
Project, oh yeah.
Worth saying. Anyway, so well done for obviously you going through the processes that you've been through. I appreciate the update as well. I think today it's just worth people understanding the building blocks for next year. Some good stuff coming out. It sounds like by the end of Q1 for sure, and by end of Q2 as well. And then a lot of drilling happening too. So come back on the show. Let us know how you're getting on, because I think this is a great little story. Perhaps hasn't been fully appreciated yet, but I suspect when this resource comes out, will be looked at.
Absolutely. And be safe. Happy New Year once again, and look forward to talking to you in 3 months.